Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Thursday, September 19th, 2013. Well, a continuation of the trend to the upside today in the candle. It's made a higher high and a higher low, but somewhat of a change in sentiment with the colour of the body of the candle turning black, where previously the body was white and the buyers had made a substantial amount of net bullish progress. Today we've seen a change in momentum in the short-term time frame to the back to the sellers, with the sellers making an amount of net bearish progress. A very small body as well at the end of a very solid uptrend, and a spinning top type candle suggesting indecision in the market and a very real possibility of a change of trend back to the downside in that first time frame. So we're looking for a potential lower high and lower low. The market has closed between the midpoint level and the low, suggesting that the sellers have taken back control of this market, although only fairly weak control. And as I've mentioned, the black body suggests that the sellers have built some momentum in the short-term time frame. In terms of a potential change of trend, we will be looking to the low. It becomes very important in the next trading day, looking for a lower high and lower low. And if the market does come off, we should look to the high at 1709 to act as potential support for this market, and there is a real possibility of that. All of the indicators are suggesting a bullish market, except in the short-term time frame in terms of the short-term dynamics, and a possibility of a pullback, which is what this market really needs, considering we have been in a very strong first time frame uptrend for quite some time. Is a real possibility and probably beneficial to this market at the moment. If the 1709 level doesn't hold, then look to the area just around the 1700 round number level for support, and it should hold as very strong support. Below there we have the Tenkan-sen trading around 1693, and then that window that was opened up, and then the cloud comes into play. So very, very solid support down below where the market's trading at the moment. A lot of levels that will hold this market up and should see buyers coming in. In terms of the Fibonacci extension, we are in an expansive mode, trading through the 100% level, trading through the 423.6% level in a bullish manner, and this market is looking very, very overextended. As I mentioned yesterday, there was the bullishness that we saw for the previous days trading all too much at once, and possibility that it was with this candle turning black and suggesting a possibility of a change of trend because of the indecision in this market. Now, let's not preempt the market. As I always mention, we can't preempt the market. We want evidence, so we are looking for a potential lower high and lower low, but also watch the high for a potential for this market to continue. If the market does continue, the 685.4% level around 1757 is the only level that we can really go by with this technique, and it really is looking overextended. It's very rare for markets to trade up to those levels, and very often markets, if they are as bullish as we're seeing with this, when they trade through the 423.6% level, very often they exhaust before they get to that 685.4% level. Now consider that I am only talking about the first time frame. That's the time frame of the candles that are based on a higher high and a higher low, not based on peaks and troughs. And the trend in that second time frame is still very, very healthy. Also, in terms of the Fibonacci retracement, it really isn't much help to us now, other than telling us that we have a market that is looking rather overextended. The 685.4% level is a fair way away. We are trading in a bullish manner through the 423.6% level. Trading up to the 685.4% level is a possibility, but with indecision entering the market, it is more likely that we will see a lower high and lower low, but we certainly don't discount the possibility of the trend continuing. In terms of Ichimoku, obviously a bullish market in all three time frames. The market's trading above the cloud, so bullish in the long-term time frame. We have a bullish bias overall. In the medium-term time frame, the market is trading above the Kijun-sen, the pink line here, and trading above the Tenkan-sen, the green line, so bullish in the fast term time frame. The Chikou span is above the corresponding price action, so it's confirming that we have some upside momentum in this market in that longer term time frame, and suggesting that there is a possibility of this trend in all three time frames continuing to the upside. Looking at the Kijun-sen, the pink line here, it is beginning to point flat and reflecting the lack of bullishness in taking out the previous high. We are trading roughly around around the high, and this is almost a borderline tweezers top pattern as well. That's when we have those two highs roughly around each other, so we will be looking for confirmation of that. The Tenkan-sen is pointing up fairly sharply, reflecting solid upside momentum. So if the market does trade down through that 1700 level, the Tenkan-sen should act as very, very solid support. And all of this is just strengthening this support that we have around the 1700 level or just below, extending down to the cloud. So a likely scenario here is a potential lower high and lower low. Confirmation of that is required. The market to come off, find support, and then the buyers to come back into the market to trade the market higher in line with that second time frame uptrend.